Hello and welcome to the look ahead for Wednesday, the 3rd of July with me, Fiona Sinkosa, Senior Market Analyst at City Index. So it's actually a relatively quiet economic calendar tomorrow. Eurozone unemployment as well as ADP payrolls and challenger job cuts in the US. With that in mind, I think the best chart we should be looking at here will be Euro US dollar. Now, starting off with Eurozone unemployment is expected to come in at 6.2%, in line with previously. Jobless ADP payrolls in the US are expected to come in at 95,000. That's up from the 37,000, which we saw last month. Now, just before we start talking about Euro US dollar, though, let's just take a quick look at the US dollar. So this is the US dollar chart. We can see that it's trading here at multi-month lows as basically as the markets weigh up a sort of array of factors. So first of all, we've got this idea of the Sell America trade, which is very much seen in the FX market rather than the US stock market, because US stocks are trading around all-time highs. But look, this is where we are with the US dollar index, okay? So we came down to levels here to lows of around 96.3. Next level on the downside we'll be looking for is around that 95 level. This was the level that we last saw in January 2022. So as I said, a couple of factors weighing on the US dollar at the moment. You've got the erratic trade policies from President Trump, which has seen many investors move out of the US dollar towards alternative currencies such as the euro, such as the sterling, which are trading up at multi-year highs. And then you've also got the concerns over the big beautiful bill, which could add around 3.3 trillion to the US national debt. And then you've also got these concerns that the Federal Reserve, or expectations that the Federal Reserve may start to cut interest rates a little bit sooner than was initially thought. So Federal Reserve President Jerome Powell was speaking today at the Sintra Central Bank, ECB Central Bank Forum in Portugal, and he didn't say no to a July rate cut. So what he did say was it's too early to tell, that they'll go meeting by meeting, data driven. And that's sort of come as we've seen that inflation in the region has not shown any notable uptick due to the tariffs from Trump. Now, obviously, there's still a lot going on as far as tariffs are concerned. Attention still turning to the July 9th trade reciprocal tariff trade deadline. Still haven't seen a deal over the line for Europe. Still haven't seen a deal over the line for Japan, nor India. Have seen the framework for the UK and for that rare earths with China. So really, I mean, trade deals are still proving to be a little bit elusive as we move towards that deadline. Now, just as far as watching out tomorrow, as I said, we've got ADP payrolls. Should they come in weaker than expected, then that could again raise expectations that the Federal Reserve could start cutting interest rates in July rather than September. The market is predominantly pricing in a September move. Last time I checked, it was CME Fed rate cut tool was pricing in an 80% possibility of a rate cut by the Fed in the September meeting. That was up from 70% the previous week. Now, enough about just let's have a quick look at what all this means for the Euro US dollar, because the Euro US dollar is trading up there at its highest levels for 4 years, above 118, got to 118.30. And that was as we saw inflation in the region rose to 2%, data through today, up from 1.9%. And I mean, the inflation is now at the ECB's target level, really supporting the fact that the ECB will likely pause rate cuts at the next meeting. The ECB and speakers, including Christine Lagarde, have certainly hinted that the ECB is close to the end of its rate cutting cycle. So that is going to help continue to see this pair strengthen. We've got the Federal Reserve, who's potentially still got rate cuts to come, ECB that's nearing the end of its cycle. Whilst we've seen this pair rise to 118, as they said, that's the highest level in over 4 years. Actually, as far as the euro US dollar is concerned, that's not necessarily, that high in historical levels. If I take this out to the month chart, we can see we're actually, down really considerably to where we were back in sort of, even 2010 when it was up at 145. So potentially there could be some serious upside to come in this pair. But as I said, tomorrow we will be focusing on Eurozone unemployment as well as US ADP payrolls. The Eurozone labour market is proving to remain relatively stable. And so, yes, as I said, ECB seem on track to pause. Potentially there is still one rate cut left across this year for the ECB. But that differential is obviously offering some support to the euro, as is the fact that it's pretty stable politically in Europe compared to what we've been seeing recently in the US, although we've still not got any details about a trade deal with the US for the EU. They've been trying to push for special treatment as far as reducing tariffs on certain sectors such as cars, car imports, steel, pharmaceuticals, but there hasn't seemed to be too much progress. This here, we're looking at US dollar, Japanese yen. So we have seen the dollar recover actually from its lows. This pair did actually drop to 142.68. We've seen it recover back towards the 144 level, 143.85 level. It continues to trade within this very familiar range. What we saw overnight, we saw that strengthening on the yen after the Tankan data showed that large manufacturers in Japan were actually holding up better than expected and showing signs of resilience. Since then, we've seen, as I said, the US dollar recover some of those losses. We've got a lot going on as far as the dollar is concerned. Trade tariff deadlines to be watching, the big beautiful bill to be watching, and now the Federal Reserve potentially cutting rates sooner than initially expected. When we tie that together, it's not surprising that the US dollar has had its worst first half since 1973, down 10% across the quarter. The question is, will it continue to fall? I think US dollar weakness is likely to continue across the coming year, which could benefit, the rest of the year, which could benefit the Japanese yen. But again, trade deals, as far as the Japan is concerned, trade deals, there isn't seemingly anything being agreed as of yet. So that is going to be an area to watch as we move towards the deadline on the 9th of July. As far as levels to be watching, we're going to need some strength in the yen to get below that 142.50 level, 142. That's going to bring the 140 level below that, which is the low of 2025 into focus. Buyers will need a rise above 146 to create a higher high and get the 148.65 level back into play. So I hope you've liked everything that you've seen today. If you have, then please do give this video a like. And for more videos like this, then please do subscribe.